common words you should know as a beginner trader. Hey guys, you're welcome to today's episode. My name is Rita Chidi, and if this is your first time coming in contact with my video, you are welcome, and do well to subscribe if you've not subscribed. Like this video. This video is centered basically for beginners trader, and if you're still considering whether you should start trading or not, this video is for you. And if you have been trading for a while, this video is also for you. So there's this important aspect that I want to bring up now, which is some common words you should know as a beginner trader. These are very vital. Why am I making this video? Because it gave me a tough time when I started off. When I hear these words from tutors, from on here on YouTube, or from different videos, I hear these words and I'm confused. Now I'm here to guide you and teach you so that it can enhance your learning process in order not to get confused along the way. So some common words you should know as a beginner trader, be it Forex, crypto, stock, whatever market you are trading, these words are very vital. And the number one on my list is key level. Now, what are key level? When I started off, I started hearing people say key level, key level. Another time I will hear support and resistance, and another time I will hear supply and demand, and I get confused. Now, let me tell you, support and resistance, supply and demand, order block, POI, swing highs and swing lows, swing point, zones, these are all the same thing. They are all the same thing. What is key level? Key level are significant price points on a chart where the price of an asset has historically shown strong reactions, such as reversals or continuations of trends. These are areas where there's a turn. And so when you hear swing turn, swing point, swing high or swing low, it simply means where the market turned. Assuming the market is going up, take for instance, assuming the market is going like this, what is the meaning of this? It means that the market is on an uptrend. And what does that mean? It means that when the market got to this point, what happened? You saw that there was a shift. The market turned. This is called swing high. And it's also called key level. It's also a supply and demand, and it's also a resistance. This is a resistance. This is a support. This is POI. This is key level. And this is zone. Swing high, swing point. They are all the same. So I am telling you now so that you don't get confused along the line. You see that the market was going up and it got to this point and it turned. So there was a reaction. So this is where we had a reaction, which is why the market turned. And for the fact the market turns here, it becomes a key level. It becomes a zone. It becomes an order block. It becomes where a lot of people are interested in. Is a POI. The same thing with when the market is on a downtrend. If the market is coming down like so, doing lower low, lower high, lower low, lower high, it's the same thing. So anywhere the market turned, it becomes what? Your key level. So you can see the market turned here. That's our key level. So what does this key level do? These key levels are area of concentration, point of interest, where you can decide whether to buy or to sell. So you don't buy or sell in the middle where the market is like this. You wait for a retracement, for pullback before you enter a trade or you make your decisions. So when you hear key levels, it simply means it can be supply and demand. It can be support and resistance depending on the kind of strategy you're using. In SMC, we call it order block or supply and demand. And if you're just using support and resistance, it is called support or resistance. It's the same thing. So in trading, an order block is a specific price zone on a chart where a significant number of limit orders, typically from institutional traders, have been placed. So whenever the market turned, there's a reaction. There's a reaction. So I want you to get that cleared before we proceed to the next thing we're going to do. Now, this is BTC USD. The first thing you are supposed to do when you come on any chart is to do your top-down analysis. And what do I mean by this? Top-down analysis simply means looking at the market from a higher time frame to a lower time frame. So on this case, I am going to start from weekly. Now, this is my weekly, and what can you see? So we use Forex charts to determine, or we look at the back data to determine what is going to happen. We use it to predict, because when it comes to trading, nothing is static, nothing is permanent. Trading is dynamic. So we are here just to predict. So we will predict, but before you do that, you do your analysis so that you can have your bias. So when you come on weekly, you can see that there's what is support. There's a place that the market actually reacted. See, when you got to this place, it turned. You can see it is a swing high. It turned. It's a swing point where the market turned, and someone can call it order block, and another person can call it a supply zone. So it's all the same. It turned here and it got to that same place again. It turned. So it's key level, and it's becoming stronger because it turned the first time, it turned the second time, it turned the third time, and it still could not break it. Now, for the fact that it could not break this resistance zone, it means that we are only looking to sell. Until it breaks this resistance zone, that's where you can decide to buy. But for now, we are looking to sell. Why? Because it's at a resistant point, it's at a key level where there's an order. There are a lot of sellers are coming in. So when we get to daily, it becomes more. When we get to daily, it becomes more. When we get to daily, it becomes more interesting, because why? The trend becomes clearer. We can see that it is pushing down. So it is downtrend. But there's something very interesting as well here. You can see that there's a support already building up. There's a support. So you see that it got to this place, it turned. It got to this place again the second time, it turned. It could not break this level. So it's a zone. Is a key level. It got to this level again and it turned. So now this is where we are at right currently. So what are we looking at? We are looking at to see if this market will break this support zone, or is going to respect it and continue buying. So what are we going to do? This is daily. So we are going to wait for a day to see if what will be the reaction, what will be the outcome. Did he break this zone, or did it up, or did he break it down? Now, when you go to 4 hours, it becomes even more interesting. So that's why you do your top-down analysis before taking any trade. And this is the simplest method, simplest way you can learn it. There's no big deal about this top-down analysis. When you hear people talk about top-down analysis, you think it's one big thing. It's just a simple thing of moving from one time frame to another, mostly from higher time frame to a lower time frame. And in this case, you can determine what will be your higher time frame. You can decide 1 month is your higher time frame. You can decide weekly is a higher time frame. You can decide daily. So it depends on you. Some people who are, scalpers, they decide that, their higher time frame is 1 hour. Some even decide their higher time frame is 15 minutes, and they scale down to 5 minutes and to 1 minute to take their trade. It is all the same. It is all the same. You know that market is fractal. So it keep repeating the same thing over and over. Whatever that happens on 1 hour will still happen on 30 minutes, and it will still happen on 15 minutes. The same way, anything that happens on weekly will still happen on daily, will still happen on 4 hours. So that's it for me for now. See you in my next video. Until I come your way again, bye for now. And in my next video, I'm going to teach you how you can have conferences, different conferences to consider before taking any trade, and confirmation entry. Bye for now.